The question is what happens next. Let's ask Stacy Rasgon with Bernstein, his first reaction here to that earnings print. It's good to see you, and I appreciate you doing this on our program.
You bet. Yeah, the stock's off.
You raised a target, so you must be happy, right? You raised a price target?
Yeah, we took our target up. We took our estimates up. We rolled our valuation horizon forward a little bit. I think it's fine. The quarter was fine. It may have missed sort of the whisper numbers by a little bit, but this was a bit of a transition quarter. This is the quarter where China came off. And this is the quarter where the GB 300 started to take over from the GB 200. And if you look at what's implied in the guidance, it implies, in my opinion, a very sharp acceleration in NVIDIA's Blackwell sales in the next quarter. You're probably growing, I think Blackwell grew 17% in Q2. I suspect it's probably growing 25 to 30% sequentially into Q3. And that ramp is driving the bulk of the sequential growth of the company into next quarter, which was very strong. So I'm not too worried about it. It's just on an absolute basis was a little bit messy, and with China and everything else, and the stock side, it's down a point. It's not even very much. I think if you're sort of digging in, there was nothing really thesis changing one way or the other, bull or bear this time. If you sort of clear away the China noise, it was actually reasonably quiet underneath the surface.
Well, let me ask you more about the China noise, because I feel like it's getting noisier in some respects around the issue of Blackwell. This idea that they're going to be able at some point to sell it there. Number one, do you believe that? And number two, at what price? At what price? I don't mean literal price. I mean the cost of doing business there is going to be what? If in fact they're even able to do it with Blackwell. What do you think?
So right now, the guidance and the quarter of the guidance don't include any sales into China, either of Hopper or Blackwell. I actually suspect that the issues right now with them selling at least Hopper into China is not really from the U.S. government side. I think it's from the China side. There's been a fair amount of speculation about the Chinese government wanting to halt purchases of NVIDIA parts. I actually think that's probably true, and so maybe Jensen needs to get on another plane to Beijing. In terms of Blackwell, we'll see what the Trump administration has to say. We'll see what China has to say. Where I keep coming back to is I'm very confident that there is demand for these parts in China, whether they're Hopper or whether they're Blackwell. I just don't think there is enough local capacity of locally sourced parts to support the local demand for AI. I think the customers want NVIDIA's parts. We'll see if NVIDIA is allowed to sell them or not, but I think the demand is there.
One of the issues that we've been kicking around today is the tremendous concentration that exists for NVIDIA with its customer base. It's very small, highly reliant on a very, very select few of very, very large buyers. I had Brad Gerstner on earlier from Altimeter. NVIDIA's his number 2 position. I asked him the question, and I want you to listen to his response, and then we can react on the other side on the idea of, is there too much concentration in the customer base?
It's kind of like saying the United States exports are dependent upon Europe, India, and Southeast Asia, right? The fact of the matter is these companies are as big as countries. They are the biggest buyers in the world. They're the only ones with the balance sheet and the free cash flow that can scale up compute at this level. It's a huge national advantage. I don't view that as a problem. In fact, I view that as an asset.
Do you?
Look, I mean, he's right. Those are the companies with the money, right, first of all, as well as the business models that over time can help monetize these investments. And they can afford it too. I mean, I can't even remember what the operating cash flow of the big four CSPs, but it's hundreds of billions of dollars a year, and they're spending hundreds of billions of dollars a year in capex. And these companies they're not idiots. They're not spending this money with no visibility for a return or profitability. I think we're already starting to see adoption and returns on AI. And you have to remember also, for some of these guys, it's also existential. Right. The idea is if we don't continue to invest in this, the world is going this way. We may be out of business if we don't. And so I think they keep spending. And the only thing we've seen so far this year is capex budgets from these guys continue to march ever higher. And again, I don't think that they're spending to no purpose. They all have a reason. But I'm not surprised that the concentration is there. Again, Brad is right. These are the companies with the money and with the business models to deploy this stuff.
Listen, at $46.7 billion, you broke your sales record, and you expect to do it again, right, in the third quarter? Your sales guidance, $54 billion, is above Wall Street estimates. I need to know right off the bat, what customer demand are you seeing right now that gives you that confidence?
We are at the beginning of the AI revolution. And the last year, extraordinary progress was made in AI. AI can now reason, basically think, do research, use tools, solve problems. That's the reason why ChatGPT has become so good. Because you ask it a question and it goes off and thinks about it, does research, does things for you. It's incredible. And so we're seeing AI going into every industry, from, of course, the clouds, the enterprises, industrial with robotics and automation, and, of course, self-driving cars. Just everywhere we're seeing AI adoption really, really growing fast. Now, at the core of our business, we launched the second generation of the revolutionary Blackwell architecture. It's the first of its kind type of AI supercomputer. This is the second generation of Blackwell. We call Blackwell Ultra. The code name is GB300. Everybody calls it that. And we ramped $10 billion worth of GB300 in the first quarter. And next quarter we're going to ramp really, really hard. So we've got a lot of build out to go.
Yeah, it sounds like the fire is really hot. I mean, your second quarter earnings, though, did show, and everybody's talking about this, so we got to bring it up, zero H20 chip sales to China, even though earlier this month President Trump reversed that ban on those sales in exchange for a 15% cut of your China revenues. And then the forecast for this quarter assumes, again, zero H20 chip sales to China. Are you guys just being conservative, or have you seen orders from China come to a halt?
We haven't seen orders yet, but we're hoping for orders. H20 is really a fantastic product still. The price performance, its cost efficiency, and its ability to generate AI tokens is really terrific. So I fully expect, and I hope for, POs for H20. America, being able to have the world build AI and build software on the American tech stack helps America win. And President Trump understands this. And I'm very grateful that he approved the licenses of NVIDIA H20s for Chinese customers that are not on the entities list. And so I'm hoping we're now free to be able to sell to them. When the orders come in, we have some H20s built for this coming quarter if the orders come in. And so whatever comes in as a bonus on top of our guidance. And our guidance, as you know, is already quite significant.
And when those chip orders do eventually come in, quite frankly, I'm surprised you say that you haven't gotten any orders yet. But when they do come in, what kind of numbers, what kind of revenue do you foresee for that?
The AI market in China is probably about $50 billion to us. Several quarters ago, we were running umpteen billion per quarter. And then when H20 was banned, it went to zero. And so my hope is that we'll be able to go back and address a significant part of that $50 billion. And it's growing, just like the United States is growing. And the rest of the world is growing in AI. So the China market is definitely growing really fast, and I'm looking forward to it.
Well, you've made it clear you're eager to sell not just the H20, but even the Blackwell, your most powerful chip, to China. Have you had that conversation yet with the Trump administration?
I've started to have the conversation with them. I think that the conversation will take a while, but President Trump understands that having the world build AI on American tech stack helps America win the AI race, and he wants American technology all over the world, so that the whole world is built on the American standard, like the U.S. dollar is, the global standard. And so I'm very optimistic about it. I don't know the time frame for it, and we'll continue the discussion.
How do you feel about NVIDIA today?
Yeah, Nicole, I mean, we feel pretty good. I mean, the results were, I'd say, relatively in line. The guidance was slightly ahead of our expectations. I think there was a lot left to be desired for this company when you kind of look out over the next couple of years. I think what Jensen did a really good job on on the call was really kind of bumping up expectations for their total addressable market, where there's significant upside to be had. You look at that October quarter guide, essentially threw in no China data center revenue, which essentially means that there, again, is more upside to be had. In fact, is all upside in China when you're looking at a zero run rate at this moment in time. And he essentially said, hey, listen, we think that the market in China next year could potentially be $75 billion. So, I think overall, this is a company where you should feel pretty confident about the sustainability of their top line in terms of where hyperscaler CapEx spending is today and where it's going here over the next 2 to 3 years, with the potential for upside if China starts working, or if we see greater momentum in areas like sovereign AI or enterprise AI spending.
I like that you talk about the guidance being at least a bit of a bright spot. You talked about the addressable market. The guidance part of the story is the big part of the story. The data center revenue miss was ever so slight. It's more about this going forward part of the story, right? Right now it's around $180. What was your prior target? I know you're combing through and maybe discerning what should be your next price target. What was your target up till today?
So we actually this morning did increase our target price. We tweaked it higher to $210 from $206. We also tweaked our estimates higher, which essentially the 210 implies a multiple of about 29 times to our calendar 2027 estimate. As far as the valuation of this company, I think it's really important to know. You look at the three biggest companies in the S&P 500. You look at NVIDIA, Microsoft, Apple, all phenomenal companies representing over 20% of the S&P 500. On a 2027 basis, all three of them are trading around 25 to 26 times our 27 estimate. That's important because the risk reward for all three of those companies are very different in nature. In terms of the upside to the EPS estimates, we think there's the most upside to NVIDIA among the three of them. But again, maybe there's a little bit more risk tied to NVIDIA versus Apple, but nonetheless, the upside potential to NVIDIA still remains there.
I want to circle back and just give people the size, scale, scope, why NVIDIA chips are the very best, how they prize so much within the chip, that there's no chip like the NVIDIA chip. Is that the story still? Because, AMD is trying to catch up. All these other companies are trying to catch up. But really, NVIDIA provides something that no other company can. Is that right? What is it about the NVIDIA chips that people really need to know?
Yeah, I think the most important thing is that they're no longer a semiconductor company or a chip company, right? And Jensen really kind of made that point, or has continued to make that point, in the fact that, hey, listen, they're this infrastructure company. They sell, complete rackable systems at this point in time. That you've got thousands of chips that are necessary to make, just one rack on within a data center, and then you're talking about thousands and thousands of these racks. So when you think about NVIDIA and what they do, is they're an ecosystem at this point in time. It's not only the hardware, also it's the software. The software is incredible because they control the entire stack, and they've got more than 5 million developers attached to that software ecosystem, and it's extremely difficult to walk away from an ecosystem that offers what NVIDIA has to offer those developers. So there's incredible stickiness. And now you're entering a period in this AI evolution where there's really nobody else that can do what NVIDIA does in terms of offering the total infrastructure and package. And the first phone call you're making when you need to build a data center is you're calling Jensen and NVIDIA, because no one can really do and offer what NVIDIA can offer if you're kind of in this infrastructure build-up phase that we're in right now. I will say this about AMD, though, because it is our top pick in the space at this point in time. We made it a strong buy a couple of months ago. They are going to be a good second alternative on the GPU side of things, we think, because they're offering an open stack software solution where they've now got all the pieces to sell a full-scale rackable system. So we think that, and that's going to start happening in 2026. So we do think that is going to be a nice alternative, where we do think the street is underestimating the revenue potential tied to that name.
NVIDIA, and you have a bullish example trade. Would like to hear more about that.
Yeah, Nicole. Well, it looked a little bit better when the stock was up. We're falling right now. NVIDIA traded up above 182. Now starting to fall, so some of the prices might be off on these, but still the same balance if you have a directional bias on this, kind of setting up with Angelo's thesis here and a lot of the other analysts. I didn't see one price target cut in this name this morning. All price target hikes across the board, but the stock is falling right now after that report. So first strategy I looked at, a little bit more aggressive. If you think this thing is going to rebound, I think one of the key things is you want to give yourself some duration in this, as opposed to buying the shares, using the option market to create a little leverage, lower your risk on a bullish position. So I went out to the October monthly option. So 50 days to expiration on this one. We're going to buy the 180 strike call. That was in the money earlier. Now it's out of the money to the upside just slightly. Buy the 180 call, and then against it to offset some of the risks and costs on this bullish position, sell the 200 strike call. So bullish $20 wide call vertical to the upside. If you think this stock is going to rebound, you're going to pay roughly, I've got a debit of 730 on there. The debit's actually down to 630 now, so it's falling along with the stock. But the debit you pay is going to be your risk on it. So you're paying less than half the width of this strategy, this bullish strategy. If you pay a 730 debit, it takes your break even up to 187.30. You probably get a break even 186.30 now if you pay 630 for this. But the idea here is you're giving yourself nearly 2 months in this position. Implied volatility levels have been crushed post earnings, right? Even though the stock's down, and that makes these directional biased verticals cheaper, and that means less risk on the position. Now, you pay that 730, takes your break even up to 187.30. That's a few percent above the current share price. So you do need that move to the upside to get above that break even to be profitable on this one. But you've got plenty of duration, Nicole.
Okay, and then, and we heard Angelo Zeno talk about his price target raised to 210 from 206 and his buy rating. You also have a more neutral example trade. Let's hear more about this.
Yeah, I think there's people that think there might be some more pain in this stock, maybe some consolidation at these levels because it was a pretty good report, and maybe you want to give yourself a little bit of a cushion, but you'd be willing to own the shares if the stock does continue to fall. So I went out to the September monthly option, so 22 days to expiration, a little bit shorter duration on this one, and we're just going to sell an out-of-the-money put, a cash-secured put type of position. I sold the 172.5 strike put. And on here, we collected originally about a 320 credit on it. It's trading actually 420 now, so you can collect another $1 on it, and that lowers your break even. But the idea on this is you're selling out of the money put to the downside with the expectations that, hey, if the stock stays here, goes higher, or even goes lower, and stays above the break even on this one, you can be profitable. Now, on this one, I sold the 172.5 strike put. If it goes below 172.5 at expiration in 3 weeks, then you'd have to buy the shares. But if you collect that 320 credit on it, it takes your break even down to 169.30 to the downside. So you've given yourself that cushion. You're willing to buy the shares, or if it doesn't fall below 172.5, you just get to keep the credit that you collect. It's trading above $4 right now. I've got 320 on here. But that's the whole idea of this. Take advantage of the pullback that you're seeing in the shares. Selling out of the money put to the downside with the expectations that, hey, either way, I get to buy the shares cheaper if I'm still short that put and it's below 172.5, or I just get to keep the option premium I sold it for.